Okay, welcome to the TBR webinar series today. Elitsa, Bakalova, Kelly Lesiczka, Boz Hristov, John Kroll, and myself will be discussing the IT services market and its rebound after the very dismal year that was 2020. But before we get started, a few housekeeping notes. At the bottom of the screens, you'll see a series of buttons, pretty self-explanatory. The most important one is the Q&A button to submit your questions, which we will tackle at the end. And after the webinar, you will receive an email with a replay link as well as a link to view other webinars that have happened before and are coming up in the future. So let's get going. Today we're going to hear from Elitsa, who leads our analysis of IBM, Capgemini, and Atos, as well as she authors the quarterly IT services benchmark, which we're going to feature prominently here. And we'll hear from Kelly, who leads our vendor coverage of HCLT, Fujitsu, and Cisco, as well as a few of the management consultancies. Kelly also authors the management consulting benchmark, which we publish semi-annually, and we will cover that in a separate webinar. And we have Boz, who leads on Accenture, Infosys, KPMG, and Deloitte, as well as producing monthly reports in our digital transformation practice. And in addition, Boz produces our semi-annual global delivery benchmark, and we'll share some insights specifically from that research as well. And helping Boz talk about global delivery will be John Kroll. He's not pictured today because he was a late addition, and his vendor coverage includes TCS and Tech Mahindra. I'll provide some color commentary throughout from my perspective of looking at all the vendors, as well as some thoughts towards the end about innovation and transformation centers. And if you're new to TBR and you're wondering why I keep saying vendors, that's because that is how we look at the world that we cover. We try to understand individual vendor strategy and performance, then place them into context in the market that they play in. And I'm really excited to be doing IT services. Specifically today, we've done a few webinars recently on blockchain and on edge compute. I feel like now we're going back into sort of our happiest wheelhouse of IT services. So with that, let's talk about what we're going to cover today. We're going to talk about our overview of the performance and the key trends in 2020 for the 30 vendors that are covered in our IT services benchmark. We'll talk about how pursuing technology-enabled transformational opportunities will allow vendors to ramp up revenue growth. We'll talk about managing resources amid a global pandemic and what's next for headcount strategies. And we'll talk about the state of adoption in services and the impact on vendors' profit and loss. So and as always, like I said, we will save time at the end for plenty of questions. But let's start right now with a polling question to kind of get us rolling. And it's really simple. When we look at sustainability and climate change is such a hot topic, which is the IT services vendor that comes to mind as the leading one in decarbonization? Lots of options to choose from here while you're thinking about it, and not to influence your decision or anything, but we did include in our most recent digital transformation blockchain market landscape a description of the really cool blockchain-enabled climate accounting platform that KPMG has built based on what's been happening in New York City and some regulatory changes there. Really kind of a fascinating thing they've put together. And if you haven't seen the digital transformation blockchain market landscape report, reach out and we can get that to you. So hopefully that's been enough time for everybody to weigh in. So let's see some results. Not surprisingly, Accenture and the combination of the hyperscalers looking very high on there. Atos and Dell doing well. Since Boz is the lead on Accenture and Elitsa is the lead on Atos, I guess maybe we'll let them make their comments about that and the results of that polling question. Actually, in the next section, which is something we're going to do, it's a little bit different. On a recent blockchain webinar, we ended the whole thing with sort of a lightning round of opinions from all the analysts, giving their kind of gut assessment of what will be happening with blockchain in 2021. So today we're actually going to start there, not with blockchain, but with each one of us, with the exception of John Kroll, going around giving a 90-second soliloquy on one or two key IT services trends for this year and what's happening now or what we will expect coming in 2021, 2022. So we'll start with Elitsa, then Kelly, and then Boz, and then I'll wrap. So Elitsa, over to you. You got 90 seconds. Clock starts now.
Thank you, Patrick. So we're seeing vendors constantly expanding their offerings and solutions. They're either going into new areas or they're deepening their core areas of expertise because they want to provide more value to clients. And one area that's emerging is, as a topic of interest, is decarbonization. And you very well noted that there are a lot of, notice on the previous slide that there are a lot of vendors that are expanding into decarbonization. And we're seeing an increasing interest from both vendors and clients to start developing, both changing internally their own operations and also launching offerings that help clients improve their carbon footprints. And that's because people are becoming more cautious about the environment and protecting the environment. And it's part of the company's corporate social activities, but it's also seen as an area of competitive advantage, as a way to establish new business models, to generate new revenue streams, and to save costs, both on the IT services vendor side and on the client side. And I think the pandemic also facilitated this trend, as multiple IT services vendors realized that they're saving on travel costs and they're saving on utilities costs by having their people work from home. So they began to seek ways to sustain such activities in the post-pandemic world. And they're looking for ways to pursue initiatives around powering offices with renewable energy, with reusing and recycling e-waste, or switching corporate cars to electric vehicles. And they're also looking to find ways to provide measurable results around decarbonization. And Atos, which was in the high rankings of the poll results, is one of the companies that we see advancing very well in the area of decarbonization, along with Accenture as well. But there's going to be more vendors that are ramping up activities in 2021 in decarbonization. So it's here to stay. We'll see more competition coming in during 2021.
Hi, this is Kelly. The trend that I found to be coming up really rapidly is around the alliances and partner ecosystems, and how they've expanded around technology-enabled solution development. And we've seen quite a bit of expansion within partner ecosystems, particularly among vendors that had been more tight-knit, more exclusive partnerships, not as wide-ranging, but we've seen that change, especially during 2020. It kind of led into now, where they've been working with a larger volume of partners. And the partners have kind of spanned from all different types of partners, technology partners, as well as niche vendors within different industries, as well as different technology areas. So we expect to see that grow a bit more as vendors are really seeking to address growing demand around cloud and digital, and trying to find different ways to use those technologies to address unique business cases. One example I want to call out within my 90 seconds is around HCL, and during 2020, they forged a lot of different partnerships with larger technology firms, and so they weren't always as vocal about their partnerships. They still had quite a large partnership ecosystem, but they primarily focused around their IP partnerships as well as their general portfolio development partnerships. But during 2020, they kind of expanded that a bit more, and they were focusing on developing some of these different areas, both looking to develop their scale and their reach around their software portfolio, as well as just building out some of their cloud and digital, as well as their industry capabilities. On to you, Boz.
Thank you, Kelly. So the way I'm looking into it is looking for the future of work and the implications around it. So there's two components and two trends that we are closely following. One is the future of selling and innovation, and the other one is implications on the service delivery. So on the first part, on the focus on return to the office, has been the discussion around, has innovation stalled, and what does it mean to the future of innovation? Can innovation be done via screens? We have heard from clients of ours that have done billions of dollars over Teams, which tells us that, the selling part is not slowing down. At least the vendors been able to capitalize on the opportunity to sell through virtual. However, we expect to see a more pressure from the technology side, from technology vendors that are seeing and starting to talk about that innovation, their experience innovation may be stalling. We know software and technology companies thrive on selling the latest and greatest tools, and that may kind of push some of the vendors to bring back employees into the office and try to bring back innovation workshops, discussions into in-person. That's still to be seen, but something that we think will come from the technology vendor side that will drive that innovation and back into the office. The bigger implication for return to the office when it comes to the service delivery is something that while selling has been top of mind, the high-touch advisory services have been top of mind, is on the execution side. We are seeing, and we'll talk a bit later about the digital exhaustion in terms of a service delivery and utilizations increasing throughout all the vendors we cover within the global delivery. IT services benchmark is constant. So what we're seeing there is that the oversight and ensuring of a consistent quality is something that some of the vendors are starting to think through and then trying to assess what's next for them, which we believe once at the country level or the regional level, vendors are allowed to bring in, we think that employees will be back into the office at least 50 or more % for the most part of their workforce, just because there needs to be an oversight, needs to be quality assessment, and needs to be quality management, and obviously address the digital exhaustion as a threat to the overall workforce. Patrick, over to you.
Excellent, thanks. So 90 seconds, here we go. So IT services remains a people business, even with all the automation Boz is going to talk about later. When you combine that with that need for people with the need for business resiliency that we all learned so painfully during the pandemic, plus the war for talent that we hear about all the time from IT services vendors and their clients. And when I think back about some of the discussions we had last year with folks all around the world who were building out their IT services capabilities outside of India, outside of the normal traditional places for offshore IT services. And then when you consider the new realities around H-1B visas here in the U.S., you put all that into one big mixture, and I think the IT services market will see an acceleration of growth for offshore services in more places than we've seen before. So Egypt, Morocco, Guatemala, Vietnam, and then add to that connectivity is improving almost everywhere, and the pandemic taught us how much can actually be done remotely. So my expectation is that by the end of this year, we will have seen a rapid acceleration of new hirings, new centers, new offshore facilities outside of India, including more hiring here in the U.S. and all that. But the real change and growth will come in countries that are able to harness those trends around resiliency, the talent shortage, and connectivity. And I think I got that in under 90 seconds. In any case, let's keep moving on. Since we're talking about trends, I do want to point out that we do make predictions every December. You can find these on our website. And those predictions look across professional services and IT services and digital transformation. And some of our expectations have been more than met. And in preparing for this and looking back at December 2019 and our expectation that with or without chaos, 2020 will be a turning point. Yeah, there was chaos. 2020 was a turning point. And then actually in December of 2018, we were talking about the need for code, not slides. The idea that clients wanted their consultants to come to them with products, with some sort of technology-enabled product, some kind of platform, not just a slide deck. And that's exactly where a number of the big four firms pivoted to in 2019 and in 2020. And then at the end of last year, of course, we saw that hybrid is going to continue. It's how we're all going to have to continue to live and to work, even post-pandemic. So I just want to sort of set the stage for our thinking tends to flow in those kind of directions and on those kind of trends. But now that we've talked about the big trends, let's get into some of the actual data on these companies. And with that, I will turn it over to Elitsa.
Thank you, Patrick. So I want to show you the revenue performance for the 30 vendors that we have in TBR's IT services benchmark and tie that performance with the predictions that Patrick just introduced. For 2019, we expected vendors to ramp up activities around developing their industry expertise in terms of industry-specific solutions in industry-aligned organizations so that they increase the value they provide to clients. We also expected vendors to tie digital transformations with humans, how technology-enabled solutions improve employee, customer, and user experience. And we expected vendors to expand their capabilities around technology-enabled offerings with asset solutions and even hard technology at the start of an engagement instead of slides describing a cloud-based application, for example. While, as you can see on the graph, revenue growth slowed during 2019, such activities were still ongoing during the year. And as the pandemic hit the world in 2020, the vendors that were ahead of their competitors in developing industry expertise in human-centric transformation and technology-enabled offerings were finding it a lot easier to pursue opportunities with clients despite the challenging market, and they were able to alleviate some of the negative effects from the pandemic. 2020 overall was a challenging year for IT services vendors and for clients. However, the pandemic served as a catalyst to speed up digital transformation activities, such as around cloud, data-enabled solutions, around experience, and cybersecurity. And vendors that were ahead of the game in 2019, setting up those 3 areas that I talked about, are seeing revenue growth in 1 to 21, despite the ongoing and still lingering negative forces from the pandemic. And they're seeing and they're being positive about their performance and seeing a future revenue increases that will support the accelerated revenue growth that we expect for 2021. I'd like to turn it over to Kelly to provide a deep dive on the revenue and profitability of the 30 vendors in the benchmark.
Thanks, Elitsa. So looking at some of the revenue growth figures for the vendors during 4Q20, looking at trailing 12-month revenue declined 0.7% in 4Q20, but looking at it on a quarterly standpoint, the average revenue declined 1.9% for the vendors. A lot of the challenges that the vendors saw during 4Q20, as well as they kind of built up throughout 2020, were mostly due to the pandemic, which impacted the vendors' ability to generate revenue and identify and pursue new avenues of growth. The revenue will likely accelerate, and we've seen it from some of the vendors who have reported thus far in 1Q20. Revenue growth is accelerating, but it has not been significant as a lot of the lingering challenges and uncertainty continue to pan out. Looking at some of the challenges within the market dynamics, there's been some uneven vaccine rollouts which have impacted vendors' ability to really reopen and return to normal. Some regions have also experienced returns to lockdown within 4Q and even still happening now, which is continuing to hinder their abilities. To help combat some of these challenges, the IT services vendors will look to build out around their industry specialization, as well as deepen their cloud professional services, as well as their security. We've seen security investments expand a bit as they're trying to secure a lot of the digital and cloud environments. The use of data and AI, as well as analytics, will also remain a priority for vendors as they try to show clients a bit more of a glimpse into their operations and how it's going. A topic that Elitsa will dive into in a bit is sustainability, and that's another area where we've seen quite a few vendors already building out both for themselves, increasing their internal sustainable efforts, as well as shifting their portfolio and their strategies to also help their clients. While the pandemic continues to impact the vendors, there are a few which are called out on the side on this slide. Some vendors that were better able to navigate the pandemic and were able to achieve more normal or higher revenue targets. So Capgemini, they really benefited from inorganic revenue around the acquisition of Altron. Infosys also was able to quickly return its revenue to higher levels they benefited from some strategic portfolio development as well as some price competitiveness. Conversely, as noted on the slide, 24 of the 30 vendors experienced challenging growth performance. So a few trends that I want to call out around that performance. The slowed activities with clients due to the pandemic really impacted their ability to generate that revenue. The contract fulfillment, the vendor's ability to actually support the engagements was really hindered by a lot of the limited on-site interactions and regional lockdowns. A lot of clients also either pushed projects off, they re-evaluated the scope, which limited opportunities for the vendors. While vendors were able to make use of some of the virtual platforms, bringing together those global leaders and being able to try to replicate and produce the same results in hybrid and virtual settings, a lot of the vendors still weren't able to really quickly adapt to that as well. While they were able to shift their workforces to remote relatively quickly, some even so much as overnight, changing the way that they interact with clients and the way that they deliver their services virtually was not as quick. So that kind of impacted their abilities to work with their clients in different ways. Vendors are, the second trend here was around internal transformation. So some of the vendors that have been undergoing internal transformation and restructuring, both around business units as well as shifting the way that their talent operates and the types of groups that they have, they were hit a bit harder. They were already working to shift some of the structure that they had and create efficiencies, but then when the COVID hit, other vendors started to do that as well, and where they were already behind, they kind of got hit a bit harder than some of the others. The two vendors I want to call out in that sense, the first one is T-Systems. In 4Q, T-Systems revenue declined 7.4% in euros, and even still in 1Q20 they've released last week, they were down 4%, and they're still operating at a loss. So they've really been struggling to combat their own internal transformation while also navigating these new market challenges. So the company is primarily impacted by declines within its traditional IT business and project business, as well as really creating and leveraging the scale around digital products. While they've been successful in driving adoption and building out their cloud and digital and security platforms, the challenges within their traditional business units has really weighed the company down and limited its ability to grow its revenue and really expand in the areas where it's aiming to move to. The second company is DXC Technology. They also reported a decline in 4Q20. They haven't released yet for 1Q21, but in 4Q20 they declined around 15% year to year. A lot of it was from account runoffs, and again, that same challenge around legacy services commoditization and struggling to really overturn some of those challenges within their traditional businesses. Moving on to the next slide and looking at some of the profitability. Vendors experienced, the majority of vendors experienced profit improvements during 4Q despite a lot of the revenue challenges I outlined before. They had reduced their operating expenses and they were able to focus more on those higher value portfolio mixes. So the average operating margin did increase compared to the year ago, which really benefited from automation, those employee structures streamlining and shifting around there, as well as some expense management techniques. Vendors sought to create efficiencies within their operations to create more of that agile and resilient structure to really find new ways to work with clients and remain competitive. Automation and, again, the employee restructuring, which did include some layoffs to create improvements, which it helped to identify some of those non-essential areas and the redundancies to help drive productivity. A reduce in travel expenses also supported the improvements in expenses. We have heard some vendors have reinstated business travel, again, on a limited basis, but where it is slowly starting to come back, it will not likely return to pre-pandemic levels, is where vendors are using more of those virtual platforms, digital platforms, to facilitate collaboration and using more of a global ecosystem. It's not as necessary to travel for certain reasons or for certain meetings, so they've been able to find new ways to work in that sense and avoid the heightened travel expense. Adjustments in portfolios also helped vendors to address some of this demand. So two vendors here, Dell and TCS, they achieved very high margin in 4Q20, but the margins aren't expected to be sustainable. The timing and the portfolio launches really helped them to drive that improvement, but it's not something that's sustainable for the companies based on their models and offerings. Taking a look at the India-centric vendors, such as HCL, Infosys, and Wipro, they all experienced operating margin growth as well. Their investments in offshore leverage really helped them to use that delivery talent and delivery base to support engagements while maintaining lower expenses. HCL was effective in they benefited from their software and solutions offerings, changing their revenue mix and margin mix. They also have been investing in offshore headcount outside of traditional areas, so they've been building out their headcount in Vietnam, India, and Mexico, which has really helped them to expand their offshore leverage. Infosys also has capitalized on some cost efficiency levers, so they've been looking to embed automation within their service delivery, and similarly to HCL, increasing their offshore leverage. Moving on to the next slide, we wanted to call out some of the trends that we've seen going on across the vendors, how they're kind of shifting some of their approaches to different areas. The first one is around alliances, which I had touched on at the beginning, around their ecosystems really changing from more restrictive to much more expansive. So vendors are leveraging ecosystems of partners that are ranging from large and mid-sized technology providers to some startups, academia, and industry organizations. They're really using these to create more innovative solutions and help to enhance their services proposition. There were three key areas I wanted to call out around the partnerships where we've seen the vendors really focusing a lot of their efforts. The first one is around software solutions. We saw quite a few vendors partnering with SAP. One partnership in particular is around the Rise with SAP partnership. We've seen it from vendors from T-Systems all the way through the consulting vendors such as EY. A lot of the partnerships with some of these software vendors are to help vendors really keep pace with their peers and ensure that they're able to support the migration to some of these different environments. We've also seen growth around healthcare partnerships. So vendors have been moving to really build out that industry knowledge around healthcare environments. I know Fujitsu and NTT Data separately have been partnering specifically for treatments within hospitals, so including research using different AI and ML methodologies. We've also seen clients using these partnerships to improve their patient management and really help them with data processing and data strategies. The last, the last alliance group that I want to call out was around training. We've seen an increase in partnerships pertaining to different training platforms, different resources that are helping vendors really educate their own talent around some of these emerging areas. The second group, the second trend was around acquisitions. Vendors are really increasing their tuck-in acquisitions to help build out that specialized expertise and quickly build scale. While the acquisition pace was slower in the first half of 2020, closer to the end of 2020 and thus far in 2021, the vendors have really increased their aggression within the acquisition space and have been more quickly and at a higher volume than acquiring. I want to call out three vendors in this case. We have vendors such as Atos, Accenture, and IBM have really ramped up their acquisition pace. Accenture has always been quite acquisitive, but Atos and IBM have been acquiring more rapidly. Atos, for example, has been focusing around cloud, AI, and ML, as well as cybersecurity and software. So they're really looking to move into those more emerging areas. Similarly with IBM, they've been looking to expand around hybrid cloud and AI. The last trend on this slide is around talent. So we saw throughout 2020 that the attrition levels continued to decline and even did so. The average attrition levels into 4Q20 as vendors the talent market was still a bit less competitive. It's starting to increase now, so we will likely see the attrition levels rise. But as vendors were focusing on the well-being and career development within their organization, it helps to keep some of the employees and to avoid them from seeking other opportunities, helping to keep them engaged. Utilization rates also, they remained relatively flat. A lot of the challenges around service delivery and portfolio development dissipated a bit, and the vendors have figured out ways to work pretty well in terms of delivering in hybrid and virtual settings. As vendors are looking to reevaluate their real estate footprints, including shifts in their onshore leverage, as well as increasing the use of automation around delivery, we'll likely see utilization increase, especially as some of the vendors are still looking to change the way that their employees are structured and their organizations are structured to help improve productivity and really help equip clients or help their employees work more effectively within the organization as well as with their clients. And with that, I will hand it over to Elitsa.
Thank you, Kelly. So the next lever for growth is tied to trends in signing. We're seeing an increasing push on the side of India-centric vendors to win larger outsourcing deals and to support clients around running their businesses during the pandemic. And at the same time, while they're winning the deals, they're rebadging related client employees to support service delivery in the deals. For example, Infosys is rebadging employees from Vanguard, Daimler, and Rolls-Royce as part of recent contracts. The deal with Vanguard and Daimler, they're one of the two largest deal wins for Infosys in the history, and they're estimated at $1.5 billion and $3.2 billion respectively. Approximately 1,300 people at Vanguard who support record-keeping, client administration, operations, and technology functions are moving to comparable positions at Infosys. Infosys is also absorbing a portion of Rolls-Royce's engineering center capabilities for civil aerospace in Bangalore, India, to deliver digital services and engineering and R&D services to Rolls-Royce. So using that old school approach of buying their way into mega-sized contracts or secure renewals essentially will lead to heightened competitive pressures for IT services vendors that do not have the equivalent scale in nearshore and offshore service delivery locations, or they're just not willing to absorb headcount to open doors for longer tail managed services opportunities. And also in signing, we're seeing across the outsourcing space, we're seeing a broad trend of vendor consolidation in contracts that are up for renewal. So this further creates pressures for all the competitors in the benchmark to expand contract sizes in any way possible. On the next slide, the last lever for growth is decarbonization. We touched upon it at the beginning, but really this is a new initiative, a new wave of opportunities for vendors, both on the revenue and the profitability side. We're seeing multiple vendors, and Accenture, Atos, Capgemini, IBM, EY from the Big Four, they're all launching initiatives to become carbon neutral and to have net zero carbon emissions in the next few years. Some of them, for example, such as Atos, are setting up specific revenue goals and starting to disclose quarterly signings in decarbonization services. We're seeing vendors utilize alliances and acquisitions to expand their portfolios and client reach and gain share in decarbonization services. The key here, I think, is not to just rush to catch the new wave of opportunities that decarbonization services provide. The key is to ensure that there is strict execution, that decarbonization is integrated into broader transformations and broader offerings, and the vendors is showing tangible business results for the client instead of just making it part of marketing initiatives. With this, I want to turn it over to Boz to cover the resource management side of the equation.
Actually, let's do a poll question. All right, we're going to do another poll real quick before we do the resource side of things, and this time we'll get a little more personal. We're going to ask, what are your firm's plans to return to the office in 2021? And here we're thinking more towards the end of 2021, not necessarily by the summer or even sooner. Personally, I'm looking forward to having lunch with my teammates, but I don't anticipate working out of an actual office, certainly not this year, and I'm not sure when again I'll want to go in and sit in an office the way we used to in the past. The amount of time that is freed up by not having to be in the office really does make a difference, although I know, as Boz pointed out earlier, you can't do innovation, can't be quite as creative on a screen. So, all right, I think that's probably been enough time. Let's see what the results are here. By the end of the year, hybrid, but still most remote. Yeah, that's not surprising, I don't think, at all. I think that's where really we're hearing from everybody, and it is an opportunity there for the IT services vendors that we're talking about to continue to provide workplace solutions that fit the model, the hybrid environment that we're all kind of living in now, and as we all anticipate on this call, anticipating to do for the rest of this year, so at least. So with that, let's turn it over to Boz to talk about people in offices and headcount.
My favorite topic, Patrick. Thank you. So real quick here, we probably, just to kind of orient you to the graph on the slide. It's a way we look into the relationship between headcount and revenue growth. I should say headcount growth and revenue growth. And we are zooming on 14 out of the 30 vendors that we cover within the IT services benchmark. So we take 14 out of those 30 vendors, and we're tracking and looking into a little bit closer what's the relationship, how are vendors reacting as part of our global delivery research coverage. A couple of things just to point out and highlight and reemphasize. You heard some of those trends already from Elitsa and Kelly earlier in the presentation, but what we saw in 2020, obviously the headcount growth for the 14 vendors in that benchmark decelerated comparing to a year ago, largely due to the pandemic. But we also start seeing an uptick in between 3Q and 4Q 20, kind of a sequential uptick, which kind of provide a glimpse or indication of what we're expecting to see in 2021. And we're already well into 2021, and we're starting to see a hiring uptick across most vendors that we track within the benchmarks. We talked about workforce rebalancing initiatives, continue to highlight those vendors' efforts to develop the right size workforce bench so they can be better prepared for the pent-up demand for cloud-enabled digital transformation opportunities. Certainly, the rebadging that Elitsa and Kelly talked about is part of that equation, how vendors are trying to step up the pyramid. Acquisitions remain a key lever as well. We see an ongoing acquisition activity across most vendors. Some of them are a little bit more active than others, but it's certainly a lever that may deploy as a lot of opportunities out there from a market consolidation standpoint. So price attractive opportunities and skills attractive opportunities as well as vendors are taking advantages. The three top skills that we saw in terms of demand from across the board have been were cybersecurity, cloud, and AI. So those are the top three skills that vendors either recruited, acquired, or trained for across the benchmark vendors. The vendors are also increasingly investing in skills around product engineering services. So the product engineering services is really providing an opportunity for the vendors to, they not only enable to build new relationships with new buyers within the on the buyer side, but they also provide a conduit for cross-selling and upselling application services, which is the core for from a revenue perspective for many of the vendors we track. Certainly that IT services landscape is been attractive. It's been enticing many new contenders to come in, most notably both the consultancies we've seen coming down the stack. They're trying to build up and their application services delivery benches. It's intensifying the war for talent once again. Like I implied earlier, we'll expect to see an uptick in demand and vendors are continuing to hire for that demand. So that dynamic of the market is forcing vendors to think a little bit more strategically about who also they hire, and they tap into different channels, including crowdsourcing. Crowdsourcing is not a new way of thinking and staffing and using resources, but it's certainly, with the skills gaps continue to widen with the pent-up demand that we're seeing, is something that many vendors are tapping into. And I'll turn it over to my colleague, John, who has been supporting me on the Global Delivery Benchmark, to talk a little bit about crowdsourcing, what we have seen and heard, and what we anticipate from crowdsourcing. John, over to you.
Thanks, Boz. Yeah, so going back to 2020, at the onset of the pandemic, a lot of our attention was obviously turned to how vendors were responding to the global lockdowns. And what we saw essentially across the board was, of course, the immediate transitions to remote working for the vast majority of vendors' workforces. Nearly every company had to transform overnight. And so as a result of that, the way vendors sold and delivered services completely changed. So, as this theme, essentially the overall disruption of services delivery, as it's played out, we've begun to take a deeper look at some of the additional competitive threats that come along with that sudden shift, beyond just purely maintaining the operations and security, which most vendors at this point have passed. And so, yeah, the one that really stands out is crowdsourcing. And it's a subject that sort of fell off the mainstream in the IT services space over the last couple of years, even with the overall acceleration of the gig economy and freelancing and whatnot. But crowdsourcing platforms, Topcoder and Freelancer, for example, are actually pretty interesting players in the IT services space because they employ massive bases of skilled technologists, obviously not full-time there, but they are freelancers mostly involved in competitions or projects that are posted onto the platform. But nonetheless, that's the model, and they actually have recently been organizing some projects with pretty notable companies and research institutions around next-gen technologies and fairly sophisticated services. One that we saw around algorithm development with Harvard and MIT, and just in general going beyond what we previously thought were mostly low-value and task-oriented services. And like Boz mentioned, it's nothing new here, but there's been several examples of vendors making plays in the space. Notably, Wipro actually bought Topcoder in 2016, and DXC Technology as well started offering a crowdsourcing solution through Topcoder's resources a few years ago. But our thinking is that some vendors that aren't fully mature around automation frameworks, or perhaps those that are just looking to scale up their resources, could benefit by adopting a similar model and pursuing partnerships perhaps with these crowdsourcing platforms, especially at a time where vendors are being tasked to deliver quickly and on budget, importantly, all the while facing talent gaps across some core geographies, especially the U.S. And so we've begun to see this actually start to take shape. For instance, IBM this month partnered with Freelancer on an initiative. It includes some IBM-sponsored contests and also, notably, training on IBM Cloud. So I think the play here is more creating a talent pipeline to tap some certified talent, but it also helps build buzz around IBM Cloud, which, of course, is a focus for the organization overall. There's another angle you can take to this that we saw with Deloitte. It had a partnership with Freelancer in 2019, working on creating an internal crowdsourcing platform. So that the angle there is more on boosting utilization and just more efficient operations overall. And TCS is sort of a vendor that's looking at a similar idea. Of course, not partnering with one of these platforms I mentioned. They focus on doing things internally, but the idea is an internal talent cloud, moving talent to open projects and just deploying talent more efficiently overall. So in sum, this is something that we're going to continue to watch out for. The biggest long-term service opportunity is really around AI and automation, but we should continue to see crowdsourcing play a role in how vendors approach and also transform their own service delivery. So with that, I think I'll turn it back to Boz there to wrap up some other topics in the, on this section.
Thank you, John. Appreciate it. So yeah, maybe move on to the next slide. Kind of like the next part of the part of the presentation was around automation. And before I kind of jump into some of the metrics here on the slide to discuss, a couple of highlights on the automation part, and most importantly, the impact on profitability. So as Elitsa and Kelly talked earlier, lower travel costs, increased utilization for those 14 vendors within that benchmark certainly were key factors that helped to drive the profitability overall. Using the automation in service delivery certainly is helping to boost the profit. But what we're seeing is, given the recent uptick in hiring, it appears that the vendors are considering automation as a table stakes tool at this point of the game, rather than a single technology that will disrupt the traditional human-centric delivery model and enable them to drive that sustainable, non-linear growth that everyone has been aspiring for decades now, right? What we see in terms of, like, we talked about digital exhaustion, that's certainly a factor we'll continue to monitor how that's going to impact on profits, how much vendors will have to spend on retaining top talent. So that certainly will put some pressure on the cost of services equation, as well as vendors are trying to, thinking about how they scale up automation in the operations, beyond proof of concept, beyond one-off projects, and so supporting simple tasks just to ensure the profitability targets are met. So there's a few things that we're going to continue to watch, but the key component here is that automation has been really becoming a table stakes. And orienting to that slide right now, we wanted to zoom in on Infosys as an example of a company that have tried to go through the motions of, okay, can we do automation as a service, sell IP essentially to drive better cost of service, drive better gross margins, and trying to reinvent the wheel, so to speak, essentially of like our own DNA. And, we know that they had their previous CEO a couple of years ago that was very much focused on that effort to drive IP sales. And we have highlighted how the margins started to slide down. There was a little bit of a dip, in the last year, just because the whole, some of the headwinds were offset by the, revenue pressure in the first half of 2020, but certainly we'll start to see an uptick. What the Infosys graph shows here is real representation of what we see in the market from most of the other vendors, from what we have spoken to. And we did some more of a deep dive analysis on Infosys, speaking to some of their executives and their buyers as well. And it's really about, it's about questioning, raising the question of scalability, especially as the company continues to hire in bulk, and it's what's going to mean to the profitability. So establishing that right size bench while industrializing and monetizing its knowledge through repeatable IP is a challenge. Executives continue to face, compelling them to make some decisions on a project by project basis. So it's not, we want to go sell IP and that's going to be the core model, but we're going to assess the situation. We're going to see if there's opportunity to sell some IP assets. We're going to look into see if we can actually drive some more services. The KPI remain very project specific, as I said. Some of the common frameworks like labor costs, infrastructure costs, software costs, portfolio management are becoming table stakes for Infosys to consider when leveraging automation in service delivery. We look into their portfolio. The AI-ready platform Nia is kind of like the common platform that they use from an automation standpoint, that they use for identifying, reading, scanning documents. Infosys, however, recognizes that most of their systems and opportunities right now are within the RPA space, and RPA stage, I should say, largely offered through their Assist H portfolio, and which does that particular part of the portfolio still necessitates some ongoing human-based support, because RPA is a little bit more rule-based engines and a little bit more of an oversight of attended versus unattended bots per se. So with the Infosys margin kind of sliding down from the historical highs, but remaining steady, 20 to 24%, we believe the automation is becoming more of an enabler for growth, for profitable growth, rather than that disruptor that will force the company to pivot its value proposition of a software-like company with the P&L and everything else that comes along with it. Their products and profit and platform unit generates about $1 billion a year. It's about 7% of the overall revenue. but we do believe that just about half of that is probably just pure IP sales. The other half is more about enabling service delivery, enabling to drive services. So it's more of an accelerator versus being a software like just product sales, right? So it's something that, I want to highlight as an example. There's a few other metrics on the bottom of that slide that when we did the interviews and we did try to understand what's the impact of automation across several metrics, including revenue from automation across service lines, what are the human-to-bot ratios that Infosys uses, the impact on productivity, the utilization, and what's the, so to speak, the FTE equivalent, and also the P&L improvement. So there's some metrics. There's a couple of gaps. We just could not collect that from the response that we spoke to directly. Certainly, we believe there's some elements that we can go and get a little bit more information in those particular areas. But just wanted to kind of show there that there's some KPIs. There's certain elements that Infosys, just like many of its peers, are looking into, and they're trying to assess what's next and how to better package and sell. But it's for enabling profitable growth rather than trying to change a company within and trying to change its DNA. So that's kind of like I wanted to kind of make some highlight points on automation, on service delivery, and Infosys is a good example of that transition or that hybrid stage, I should say. Patrick, over to you.
Thanks very much, Boz. And we're going to wrap it up here with what we're releasing later this month, an updated version of our Innovation and Transformation Centers market landscape. I wanted to share one of the key points because I think it ties nicely with what we've covered so far. And I think it's an important area to understand because there are differences that are going to start to emerge around these centers in the coming year, in this year. So yes, that is actually the taxonomy that we use for this market landscape. That's not exciting. We don't normally show taxonomies, but I think it's important to understand when we look at these centers, we look at them in a fairly comprehensive way, including understanding where the centers are located and why. And of course, for most of 2020, these centers were as virtual as everything else, as painful as that was, which means, though, that starting this year, all of the IT services vendors and the consultancies that have invested in these centers are evaluating, okay, what do we need these for? Do we need a physical location? What's the best balance between in-person and remote? The fundamental question, should we be spending money on funky chairs inside of cool buildings? And the answer is yes. So for three very distinct reasons, these innovation and transformation centers, physical location, and their construction will continue to be what we think is an important success criterion, even in this more virtual kind of age. So the first thing is talent is drawn to these kind of innovative, agile, technology-infused activities. That the talent that wants to do that kind of work will want to be in person and in a non-standard environment. The standard 2019 office is not going to return full ever, but vendors are still going to want to have creative spaces in order to vie for the best talent that's out there. Second, the physical locations provide the clients and the partners of these IT services vendors and consultancies a clear indication of the vendor's commitment to the city, the region, the industry, or the technology and innovation ecosystem, including startups and universities, and even clients with their own innovation spaces. So EY's decision to build a wave space in Cleveland, Ohio, sort of reflects all of those aspects. It's dedicated to investment in a specific city and state and industry, as well as with an ecosystem partner. So we anticipate that newly opened centers in this year and in next year are similarly going to be physically located to optimize ecosystem and likely optimize industry-specific advantages as well. And then the last part, after this pandemic, clients are going to want to be in person. They're going to want to visit these centers, provided that the experience continues to be enhanced at the physical location with sort of the on-site amenities and all that complement innovation and transformation. The way I think about it is that, post-pandemic, the built-up energy for travel is going to be travel to a creative space. Don't travel to a boring conference room in Dallas. Travel to the kind of space that you want to go and enjoy the opportunity to be in a creative environment. So I think that makes the physical centers important still. So I want to wrap up here. Just want to share the the full breadth and depth of our ongoing coverage of the IT services market, how we're coming at it as we always do, starting with the vendors themselves. This slide shows the scope of the quarterly IT services vendor benchmark. You can see the metrics, the service lines, and the geographies. And then let me pull up the next slide, and you'll be able to see the same thing for the scope of the global delivery benchmark that Boz was talking about. And you can see the emphasis more on headcount, and also the emphasis being focused on the main global players that are out there. So with that, we'll take a couple of questions, and we have a little bit of time left. I'll do the first one real quick. Boz, a question I think for you: are there specific examples of how automation is driving productivity? I'm not sure if you felt you addressed that when you talked about Infosys, or do you want to say a couple words on that as well?
Yeah, I think if you go back to that slide, please, if you don't mind, just real quick. The table, Patrick, do you mind to jump back on? I'm not sure if you're there. This slide 4, please. There you go. Yep. So if you see that productivity benefit, that's kind of an indicator or a metric in a way of like how vendors are thinking, like Infosys are thinking about impact, and what's the impact on the productivity. You know, it's in a sense of like, you know, what's the FTE equivalent, as I mentioned earlier? How does that reflect on, and then how does that translate on the next table, on the next column, the P&L improvement? Essentially, is how much can we drive from as we embed automation, how many bots, but when you develop the bots, you have to consider all the costs that I mentioned, like labor costs, software development, infrastructure, project management, and so forth. So all these things are coming in together, right? And all depends on, you know, for CNSI, the productivity is about 67%. For AO is 75%. Obviously, you know, consulting element requires a little bit more of a human touch, human, you know, enabled services versus application outsourcing is a little bit more, I don't want to say mundane, but, you know, a little bit more repetitive tasks, especially around testing and whatnot. So you can see the indication of how that automation translates to a productivity benefit, and then how it translates to P&L improvement as well.
Excellent. Thanks, Boz. And so one question that came in was, could you get a hold of the slides afterwards? And here you can see all of our email addresses. If the link that you get when you leave doesn't immediately allow you to download the slides, and then just shoot it to all of us. There was another question that came in that says, how are IT services providers building industry expertise? Do you think it will be an important growth driver? We could do an entire webinar on industry expertise. Who has it, who doesn't? What it really means, how different IT services vendors have sort of swung back and forth between believing in industry and not believing in industry. But I think, and so it's a hugely loaded question. We can go down a lot of different roads. It clearly is an important growth driver. It depends entirely on the way that a IT services vendor has or does not have industry within its DNA already. But I do want to turn to Elitsa, because industry is something that is really important within the IT services benchmark. So maybe, Elitsa, if you could address that real quick.
Yeah, so very quickly in a few words, we've seen multiple developments over the past few years of vendors shifting their go-to-market from a horizontal to a vertical delivery approach. So aligning their offerings and the way they're organized and the way they report their financials by industry sector, because they think that this is clearly more valuable for clients. Multiple vendors did that. Atos was one of the most recent examples. Capgemini did that a few years ago. So multiple vendors. Then there's investments in talent. So what type of industry capabilities I need. So reskilling or approaching talent externally and hiring industry experts with industry capabilities to be able to deliver the solutions. Acquisitions are also another lever that we've seen, especially, I mean, now in healthcare, in some of the retail, for example, with improving customer experience and user experience, and improving e-commerce solutions. So there are multiple ways of approaching the expansion of capabilities, and it's definitely a growth driver, and it's definitely a trend that will continue in the coming year to generate revenue streams for vendors. And in fact, we have added this in our plans for our IT services vendor benchmark expansion, and we've modeled vertical industries across 16 of the vendors in the benchmark, narrowing down to 6 industry segments across those vendors to make sure that it's apples to apples. And it's a bit of a challenge because every company reports multiple industry verticals in a different way. So we've aggregated the data, and we'll start presenting industry verticals in the upcoming 1Q21 IT services benchmark, and we'll do an industry deep dive on manufacturing in the next publication. So there is more information to come from our side.
And with that next benchmark coming out, and with the questions that we have here, I think we will probably have to do a webinar on industry expertise and what it means in the IT services space. Thank you all for joining. You will get a link to take a survey on this. You will be able to find the other webinars that we're doing as this year goes on. But if we didn't get to your question, I'm sorry. Reach out to us, shoot us a note, and we'll get back to you. And thank you all for participating today.